Sorry, everybody, I had my microphone on mute. That wasn't very clever, was it? So I hope you can hear me now, guys. Raza, thank you. You're the first one to actually say you can't hear me. So Rafiq, hope you can hear me now. No sound, distorted video. Yeah, there's some issue. There's a bit of pixelation on the video, which is really surprising because I'm on a very strong link. No sound perfect, right, we're back. Okay, that was my fault. My microphone switched off. Microphone's back on now. So what I was saying was we got about 8 minutes to the data. So let's go back to Wednesday. ADP, the private numbers missed expectations quite significantly. 117,000 compared to 200,000. That's the private payrolls. But remember, there's been a disconnect between the ADP number on Wednesday and the NFP number on Friday. So that's continuing that trend potentially. Yesterday, the initial claims number was actually in line with more or less in line with expectations, but it's still very, very elevated. 745,000. It's never been under 700,000 a week since the pandemic started at the end, as far as the economics are concerned in the United States, from the end of last March. So over nearly a year, claims have been way over this key level. So 700,000 is the next level to get under. So again, see what happens as the weeks move on. Big issue with regard jobs. It lags. Excuse me. It lags data typically anyway, GDP data and other forward-looking data, but it's been a big sticking point. It bounced back up last week. And the other thing I was saying before the microphone was off was the issue of a big cold snap we had particularly in the southern states. So Texas, remember, Texas was nearly shut down as the electricity authority came within 4 or 5 minutes of the whole thing falling down. That week when that happened isn't the week where the Bureau of Labor Statistics, the department in the United States government that counts the unemployment rate, the jobs data. So that would have distorted things in the weeks coming and perhaps in next month's NFP number. It was a week, going back to the initial claims, the BSL week where they take the data, as far as the initial claims week is concerned, that was a weak as well. So although there's big expectations of a big beat today from many analysts, Action Economics, for instance, are talking about a 350,000 number today. The consensus within Reuters is around 182,000 and a bit higher within the Bloomberg analysts at 185,000. So anyway, enough of my talking now. Let's have a look at the chart. So as we can see, we've got basically, excuse my side of my head. Basically, we got the dollar. This is the 12 key crosses here. Let's just start with the euro. So the dollar's been accruing this week, basically. And yesterday, Jay Powell just added to that purely disappointing markets that were expecting perhaps some talk of, were a bit fussed about the yields going up so quickly. He said he wasn't. And as far as unemployment's concerned and jobs are concerned, he said yesterday it's highly unlikely that full employment, which is where we got to in the Trump administration before the pandemic struck, will get to full employment again in 2021. So 2022, first quarter of 2022, and then potentially into the second quarter and even the second half of 2022. But it could come back quite quickly as well. Obviously, the main thing that's been driving markets this week and for a while now is the yield curve. The 10-year yield, again yesterday after Jay Powell spoke, ticked up. We went back over 1.5. 1%, I think it was 1.61. We went to was the 1 year high last week. Remember, so we ticked back up over 1.50. But in historic terms, it's still relatively very low. So there's a lot, perhaps many analysts and participants are saying inflation has been marked out of the economy just because the CPI rate is going to go up if the price of oil continues to go up. That doesn't mean there's real inflation in the economy. And that goes, I'm talking about the US economy now, but that goes also for most of the developed G7 economies as well. Gold, Faisal, absolutely. We'll come to the charts after the data's come out. Obviously, we'll have a look at them as it comes out. But yeah, gold's had a right old whack again. Let's have a look at it now, actually. Yeah, well, under 1,700. So key moves today. So Big move for the dollar. Remember, gold is non-yielding. If you own gold, you've got to pay for it to be in a store, in a safe somewhere, in a safe deposit box, or in a bank somewhere. You've got to pay for that. So that's another cost. Just before I go any further, this is it's Employer Appreciation Day today, and the great Hot Forex management sent us all a nice cake today. So thank you very much to the management, and we also got a nice little cup. Oh, this little mug, so I'm going to use that today as well. So congratulations, and everybody appreciates being appreciated, don't we? So anyway, gold, Faisal, continue to go down, broke that 1700. Look at the daily chart for gold. It's been tracking lower since this double high up here we had at 1950 from November and beginning of January, but that's it's had a weak 2021 and just continues to track lower. The highs are getting lower, and as we've seen this week in particular, again the lows are also getting low, so that trend remains lower. Mountain of Gold, Sean, yeah, it's moving down, my friend. Any read? No, the data's not out yet, my friend. Any read trade? Anything to trade? Well, let's just let's just have a look at markets are expecting a relatively robust number. There'll be a big shock if we miss today. That will be a bit of an issue. So keep watching that. Precious, we just talked about gold. Gold. This is the gold on the 1 hour chart. It's been going. Let's take a look at the daily. It's been going down. Really all year. And the trend continues to increase. Actually, the momentum's increased. See how the MACD, I can't see that because I'm there, but let's just get rid of me a minute. Put that up. There we are, get rid of me. I hope you can still hear me, but there's the MACD. You can see the signal lines continuing to move down. The histograms below over the signal line as we move down. So the pressure and the trend remains to the downside. US at 30. Eric, do you mind if we just hang on to that? Because the data's coming out in a minute, and I just want to check any comments we've got on the Facebook page, because I don't only see your YouTube comments. But we'll come to the USA 30. Yeah, equities in particular have had a very bad week. They're all under their, they've broken their 20-day moving average. They've tested and broken some of them their 50-day moving average, particularly in the Nasdaq. The Nasdaq is down into correction mode. It's down 20. It's down the Nasdaq, the USA 100. It's down over 10% from its high at the middle of February. Let me just put that up. The Nasdaq. I know you asked about the USA 30. We'll come to that in a minute. But down from this high. Let me just have a look at it. Down from this high here at the beginning, middle of February, the 16th or 12th, I think it was, wasn't it, up here? 13,000, 14,000 within a snitch, and then we've just moved down very aggressively under the 20-day moving average here on the 22nd of February, and then it's breached and played with the 50-day moving average. Big move down, bounced back through, but then we've legged down this week. Big 3 negative candles. Thursday, Wednesday, Tuesday this week. So big move down for the technology stocks in particular. And the USA 30, which is what you asked about, as the data's coming out. We'll come back to this if you don't mind, Eric, as we have a quick check of the data. So let's have a look at the data as it's come through. So earnings in line, 5.5%. It is a beat, and in fact, Action Economics were really close. We came in at 379,000, so a significant beat for the March non-farm payrolls. 379,000 new jobs in the month of February. Last month's also been upgraded to 166,000 from 49,000. So that's a significant upgrade as well. I should make a note of these where I've got it down. So 166 once it's been revised, and we're at 379. So again, that might be to the upside. So big beat. Nearly 200,000 extra jobs than the market was anticipating at 180,000, 197,000. So a big beat at 379,000. Average hourly earnings 5.3%. So that's held up quite nicely. That's looking okay. Participation rate is flat. So see what the detail will be in the services jobs, because services jobs had suffered quite significantly. So see how the services jobs have done. And unemployment rates also ticked down. So quite a strong, quite robust non-farm payroll number there, 6.2% for the narrow measure of unemployment. The wider measure, the U39, the U6 has remained at 11% as well. So that isn't yet under 10%, but 6.2% for the main headline reading for unemployment, and nice number. The trade balance, the US trade balance is a little bit worse than expected, 68.2 billion compared to 67 billion last time, and 67.5 billion, which was expected. So overall, that's a good data dump for the US. So we might see some life in the equity markets, we shall see. So we've immediate response here for the USA 500 futures. Remember, we're still an hour away from the live market. We're down at 30,080, so 31,000 remains a bit of resistance intraday today. If we look at the daily time frame, though, as I was saying before, the USA 30, the industrial companies, are the ones that are benefiting from the sell-off in the tech companies. So there's this big turn to cyclicals as the market dictates them. So things like financials, industrials, and particularly the energy companies. So the big oil companies have come back quite positively as well. But we're still technically here on the daily time frame, the USA 30 here, the Dow Jones is under the 50-day moving average, closed under that for the first time yesterday, and the sell-off yesterday culminating, it might be the culmination of this week's sell-off. We'll see where we finish the week, obviously, but that's a key level. Lots of participants watching. Basically 31,000 on the Dow. Last time we went under it, it was one, back over it the next day, down, and then it was only 3 or 4 days we went under the 50-day before we rallied again to new all-time highs. This time, the sell-off's a bit like it was last time, so we shall see how the 50-day moves forward on that. Now, I can't see any of my Facebook questions, so if my colleagues could perhaps, for some reason, why can't I see them? I can only see the hidden comments. I can't see all the comments. Let me go back. Right, quick sip out of my new mug. Happy Employee Appreciation Day, guys. Raj is saying US index will fly. Yeah, it's up. It's up, Raji, you're right. Andre, hello. Positive payrolls, indeed it is, Andre. And Raji, you're absolutely right. So I can see my Facebook questions now, guys, so don't be afraid to stick something on Facebook. Can I see them all? There's only a few, but I've seen Raja and Andre. Right, so where was I? Pound yen for Kane. So pound yen, the guppy today. I don't know what time frame Kane, but this pair has been accruing on the daily time frame. We've had a much weaker yen. The yen's weakened simply because of the yield differential between the US and Japan. Remember, Japan have very stable yields and they're trying to control it. But as you can see here, the sterling against the yen has been moving. This is the daily time frame. Just a nice, steady jump on the wave. Look at this nice trend. We've been over the 20. This is the 20-day moving average here, all the way back here. This green line here, so we're going over that. We breached that all the way back at the end of December. So for end of day traders, they've been adding to their positions as that's continued to accrue. The yellow line is a 9-period exponential moving average, and that's been support as well. The yellow line here, see how that's held as well. Touched it, bounced off it, touched it, under it a wee bit there. Got back in there as we broke over 140, 180, over 143, 145, and here we are. 150, huge psychological number for guppy traders, the pound yen. This week we've tested it at the end of last week, at the end of February. Been over it again this week. Daily bid, 4-hour, dipped a wee bit into the end of the month, and it's rallied this week. So again, 150. A high this week is here, that fractal high there on the 4-hour chart, and today's R1. At 150.75, so that's the next resistance, 150.75 to the upside. Kane and the 1-hour time frame. What's been going on today? We've been up to not quite the high. We pushed the high there at 150.72. So again, that R1 moved back down yesterday into close and sort of gone sideways. Now we've weakened a wee bit today. But under the pivot point at 149.90, so that's under the key 180, 150. and support is there. S1 149.10, where the 200-hour moving average coincides with the S1 for the day. So key support there for the pound against the yen. Obi Mara, give us entries on some of these pairs. Mara, I can't tell you what to do. You know, this is a strategy. This is a system. Watch the webinar on how to trade this strategy, okay? It's basically a trend following strategy. It uses very simple moving average crossover technique. Some say it's too simple and moving averages are too delayed, but you know, they work well enough. As with all strategies, it's not necessarily the strategy. Most strategies work, guys. It's just that it's the application of it by the trader, the risk management, the lot size, the time of the day they're trading it. They might be trading a time frame that doesn't fit their personality. You know. Excuse me. Nice new mug. There we go. This strategy, Maru, if you're asking about a strategy, what would you say? This strategy says you want the moving average to be in alignment. So here it was long because here the blue line is crossed over the yellow line. It would have gone long there, and you've stayed long until it's closed back under the yellow line. That's one way. That's a simple way of doing it. Okay. The other way is to trade it up until we break back under one of the moving average. So you could have got out there. It's closed under the 5-period moving average. Yes, you've missed this big top, but you know, you've still got a nice move there. Here, it's gone short here at this point. That would have stopped you out because, zoom this up for you. You'd have gone short there because that was looking like that was moving down. Closed, that would have been your entry at that point. But then it's immediately turned against you. Your stop loss would have been up here where the market's turned, and you would have got stopped out and out a candle later. So you'd have lost a little bit on that one from there to there. And then you would have gone long, though, because at the close of this candle, as you've been stopped out there, you've gone long at the close of this candle, and then you've rallied up. It's taken some profit there. And again, you would have got out there sort of flat. Actually, it would have been a losing trade, that, wouldn't it? Then it's gone short. So that one's gone short as it's gone under there. And now it's moved down. We went to 149.46. And, it sort of found some support at the bottom of the Bollinger Band there, just using that simple moving average strategy. That's how it goes. Maxi, hello. Hope you're well. Do you think market already cashed out this news? Well, let's have a look. We haven't actually looked at the move. I say that should have been relatively strong for the dollar, and indeed we have. So euro here been going down all day. This is the 5-minute time frame. See the reaction as the positive data come out. Just a quick reminder, those of you that might be just joining us, non-farm payroll, big beat. 397,000, just 3,000 shy of 400,000. Huge, 379,000, 21,000 shy of 400,000, but a big beat, much higher than the market was expecting. As I said in my introduction, Action Economics had a 350,000 call on today's number, and it's very positive. Unemployment's ticked down 1 tick to 6.2%. And the average hourly earnings is held up at 5.3%. So there's some suggestion that the services sector might be rolling out. I haven't got the services. I haven't got the details of the services and the manufacturing, the breakdown of the jobs here in front of me on this workstation. But it's certainly a positive number. And the dollar's appreciated. So euro went under 119. Let's have a quick look at them all. Yen, I would guess. It's already trading at new 9-month highs, and we've tested R2 today, 108.65. Come down a bit from that, but we're over 108.50. So at 9-month highs, dollar yen. The yen, as I said earlier, is weakening because of the rise in the yields, particularly. And sterling cable pound against dollar here under S2 today, under 138. As the data broke a few minutes ago. We spiked under S2 137.88, and then we went below that as well. We went as low as 137.70, so a move down here. This is the 5-minute time frame, guys. Let's have a look. So drifting lower all day, and that is a spike. So where we go from now? Obviously, a fair amount of balancing up of the books on the end on a Friday. Asia's already closed. London will close in an hour or so. A couple of hours, I should say. We'll see where the US market's open. So 45 minutes to the US open on this Friday jobs Friday. So S2 is key support for cable. Stephen, hopefully you were here when I was just talking to Maru about entries and exits. People understandably obsess about getting in, getting out. Really, that isn't the key thing. The key thing with trading, Stephen, is to understand yourself and trade a system and a strategy and stick to it. Don't chop and change. If this is the 1 hour time frame, so huge sell here yesterday, having been long on this strategy. So it would have, all this profit would have, if you followed it and got out when it broke under at the end of the candle, which is, that's what the rules say. You would have been a losing trade, having had a big profit trade as it went to 140 and then rejected it. But that has more than made up for by this big move down here, hasn't it? So that's the nature of trading. It's all about having a system, having a strategy, and there are hundreds of strategies out there, Stephen, and everybody else. It's about managing yourself, managing your account, managing your lot size, your emotions, your fear, your greed, understanding the leverage on your account, understanding the margin on what you're trading, because different assets have different margins, different requirements. Understand what a lot size means. Don't trade a volume that's too big for your account. So it's all about that, my friend. Please deposit something. Bitcoin. I took the fund, but still I've not reached my age. It's a disappointment. Lily Glow, have you spoken to the support people? Come onto our website, hotforex.com. Come onto live chat, and somebody will help you, Lily. Okay. I'm not quite sure. There's obviously the background of that, but the best of luck. And we will help you out, certainly. That's what we're here for, my friend. So, MHP, do you think, I just talked about that, didn't we? The market's crashing out. Right, I'm going to flip over to Facebook and see what's going on. What's the review of the Nasdaq for next week, says Mario. We'll have a look at Nasdaq in a minute. Aiming for 9995, says Raja. I guess that's a comment related to Mario. So let's have a look at the equity markets, because they've been, as we said, they've been particularly hit, and particularly the Nasdaq itself. So this is the daily time frame for the Nasdaq, or the USA 100. Sorrow, hello. So here, as an end of day trader, you would have gone with this again. This is the same setup strategy we've just been looking at on the 1 hour time frame. It would have taken you short here on the 22nd of February, so a number of days ago. Big candle, big negative candle from 3 or 4 small ones, but it's a big fourth day down. So entry would have been there at 13,225. Found some support, obviously, at the 50-day moving average. Big volatile day the following day, so big follow through. But we actually closed back over the 50-day. We went back up on day 3 of the trade, or day 2 of the trade, and then a huge sell-off on day 4. And again, it would have, depending how you're targeting this, that was your entry. If you were using the ATR as your target, ATR's about 200 points from there. So about 200 points. So 13,226. So 13,000 is worth 30. So that would have been your first target. You could have certainly got 2 times the ATR within a couple of days. Back over the 50, but not sure what's going on. So sideways action. And then this week, so that was into the end of February, messing about. And then this week, we've gone down very significantly. The key thing for me is the 20-day moving average, as lots of you know. And so that's been short, on this strategy here into its 9th, 10th day now, from this entry here at 13,225. Stop loss would be sort of up here initially, trailing down. We're above this lot now, where your stop loss should be, round about up here, because that's a key level. It's a big stop loss now, but, see how we finish this week. Might be able to drag it down a wee bit as the trend unwinds, but that's 3 very, very strong candles to the downside for the Nasdaq this week. As I say, there's clear signs of churn in the market as far as equity traders are concerned, moving to the cyclicals, the industrials, the financials, the energy companies, out of the very, very well-performing techs. Remember, the tech stocks are particularly vulnerable to the yield curve rising, because it's all about future yields, future expectations, and the tech companies are particularly vulnerable to that. So that's why we've seen this churn out of tech, or the tech market, the USA 100, getting hit more aggressively than the industrial USA 30. So we've got the USA 30. This again, same on the daily time frame. It's come down, but as you can see, it's only just yesterday went under the 50-day moving average. Still short and under the 20-day moving average here on the 26th, as you say, a lot later than or a few days later than the Nasdaq was. Retrace, but again, the stop loss would still be up here. You might have dragged it down a wee bit, perhaps through here now. But it's still trekking down. But that was the first tentative break of the 50-day moving average. 50-day moving average is very, very key for many end-of-day traders. And I said earlier, 4 or 5 days last time we went under 50-day, and now we've rallied to new all-time highs. So see where that goes. But that remains tentative short there on the USA 30. Okay. Gold. People keep asking about gold. We talked about it earlier, but let's go back to it. Gold just remains. This is the daily time frame to here. Gold remains negative daily, simply because of the trend following strategists or trading. See, we've been under the 20-day moving average here since the 8th of January. Okay, 8th of January. We haven't broken and held over the 20-day moving average all that time. Tested it a few times here. That was 10th of February, but it's just a retrace of the downtrend. So the highs are getting lower and the lows have continued to get lower and have extended lower this week, as we said earlier. And you can see that. You can't see the MACD, but let me show you the MACD as I did before. Let's get rid of me. Oops, wrong way around. Let's get rid of that. There we go. You can see the MACD there, extended lower this week, now under 1700, 1770 is that dotted line, and we're under the big psychological 1700 today. First support today, S1, I have to zoom that up, S1 at 1685, and we've tested it already today. So 1700, big line in the sand for the gold, so continues to unwind. Lily, that's great. Let me know how you get on, okay? Email me at webinars@forex.com if you want me to speak to people as well. But yeah, that should get sorted out. Don't worry about that. Hugo, dollar CAD, big recovery for the dollar against the Canadian dollar. Obviously, the Canadian dollar's been supported by this big rally we've seen in the oil market. Oil yesterday was one of the triggers that saw the yield start to move. OPEC Plus meeting yesterday announced that they're not going to increase production for April. There was rumours earlier in the week. We went down quite significantly the oil market, on expectation that they were going to start talking about increasing output. The Russians were particularly pushing for it. Obviously, they're not in OPEC, but are a key OPEC Plus member and other members within OPEC apparently. But a clear statement from Barakino, the Nigerian secretary of the OPEC group, that they weren't going to do that. So let's just talk about, let's see the oil. So oil market rallied really significantly yesterday. Big move. In fact, was that yesterday or was that on? No, it was yesterday, wasn't it? We'd had a big move in the huge build we had in inventories as well. So the big thick yellow line there, this is US oil, is over that massive psychological, well, not massive, but it's $65 is a key psychological level. It's a 5 and a 0. So very much to the upside. And today R1 sits at 65.72 and we continue to accrue. So another one that's just been trending high. If we look at the oil price on the daily time frame, just, it runs and runs and runs and runs. Another one that's been over its 20-day moving average here since the 11th of November. Sorry, the 9th of November. This big candle here finally broke out really the day after because it was sort of sideways actually. See that, and that's just moved up. So November, December, January, February completed up. Bit of a sell-off in the end of February, and here we are, broken to new highs again for March and over $65 at the upside. The impact on dollar CAD, Hugo, is clear as well. So dollar CAD had been trending lower, so the Canadian dollar was benefiting from the rising oil price. But now we've had a turnaround in the US dollar in the last week or so. So there was a huge, quite a significant bounce from 125 zone here for dollar CAD at the end of February. Big 2-day candle. But that's still relatively positive. The sell-off on the 1st of March, because it's engulfed by that big move up. So we're still positive, and we've been over 127 again today. So is this, the fact the dollar recovering, or is this simply a retrace in the longer 2021 story of a weaker dollar if yields are going to go much higher, if there's going to be a shakeout in equity, a significant shakeout in equity markets. Remember, they've already corrected. The Nasdaq's already corrected to 10%. Remember, 20% is a bear market from the highs. We're only down 10% at the moment, so plenty more to go in that. There we go. Lily, somebody's helping you there as well. Natasha is saying contact your account manager. Absolutely, contact your account manager as well. So, dollar CAD. So it's picked up this week, breached the 20-day moving average, or it has, and then came back under it at the end of February. Back over it at the moment today. The 4-hour positive into around. Yeah, so 127 is key. Hold 127. And we could be moving up, Hugo. I don't know what time frame you trade this, Hugo, but it's been a nice trade of dollar CAD. The trend's been down. Then we've had quite a significant turnaround, as you can see on the 1-hour time frame. We tested below 125.80, 125.50 area it was, wasn't it? 125.70, I should say, towards the end of yesterday. Let's zoom this in a bit. So a bit of a shit, and then bang, as the OPEC news broke. And we moved up, and Mr. Powell said nothing to support a reduction in the yields, and so treasuries continue to come under pressure. Right, let me just tick back to my Facebook guys. So Archie's saying buy oil. Right, okay, I've got some more comments here. I can't, for some reason, I only see your recent comments. Stuart, could you please do US dollar index daily and the pound New Zealand 4-hour? Certainly. Raja, let's have a look. Dollar index. This is the 1-hour daily our friend asked for. So daily, it's turned around quite significantly this week. First week of March, what a strong move for the dollar. So it's a dollar index, remember, is a composite of 6 other currencies. So it's the euro accounts for about nearly, it was not 60%, but it's 50 odd percent of the six currencies in there. The Swedish krona's in there, obviously pound, yen, CAD's in there as well. So dollar's recovered against all those currencies, particularly against the yen. No, I'm surprised nobody's asked about the dollar yen today. But strong March, 3 strong days so far, over 91, didn't hang around, went to 91.50, and then today we've gone through 92. So if we zoom that in, where are we? What's happened? Well, we've been down, up, retrace, and now up. We've broken above at 91.50. So again, that's positive from yesterday. Only yesterday so far, but up. Next big resistance is the 200-day moving average, Raja, there at 93. So big line in the sand. Another big round number, and the 200-day moving average is there. So that's obviously way away at the moment, but having had a rally, that's what to watch for next week. R3 today sits at 92.50. And R2 is at 92.10. We'll come back under that. And the pivot point is all the way down there at 91.50 today. Obviously, the main news is out now. It's better than expected. That's helped the dollar. And we've moved over 92, believe it or not. So 91 was a key area to look for as we started the week. And we breached that, and 91.50. So that's positive on the daily time frame and remains up. So again, this crossing strategy, Raj, I don't know if you use this, but basically the crossing EMA strategy would have taken you long here on the final day of February. Big, strong candle here, taking out all of that action. So you would have gone long here at 90.90, and you're still long because that's moving up quite nicely. The 5 and the 9 are moving upward, nicely aligned, and the 20 start to turn up as well. But big move here on the volatility. See how the Bollinger Bands have widened here. See how the last 2 days movement has taken them out from the sideways action. Can you see the green lines here, guys? 91.50 and down here at 98.66. That's why those lines are in. So the Bollinger Bands were going sideways, and then all of a sudden they've gone bang. They've opened up to the upside. So that looks positive for the dollar index at the moment. Will it continue? Shall we see? Do you see cup and handle on Raji? You're talking about the dollar index on the daily time frame. Let's have a look. Not great with cup and handles. Yeah, possibly. I see what you're saying. There's your cup. This might be your handle. You could argue that's, yeah, I'm not great with cup and handles, to be honest, but yeah, that's rounding bottoms, guys, relatively negative, and that's what's happened there. It's gone up, down. Actually, it's gotten lower, hasn't it? And it's found a support. So 90 is the big support. for January, February, really 90.00, and that's, you know, I tend to look at more horizontal support, just how your eyes work sometimes. But that for me, you know, that's long, and it's been long for 1, 2, 3, 4, 5, 6 days now, and quite nicely moving up. Your other one, Roger, was for some reason I can only see the last 5 comments all the time. So if you comment too much, guys, why can't I see that? Let's have a refresh at this. Roger, can you just type in again what it was I can't remember. Was it New Zealand Kiwi? Sorry, was it Kiwi Yen? I've lost you now. So, right, hang on. Right, I can see all the questions now. Right, so somebody's saying buy oil, Archie. Yeah, Archie. Dollar yen, Archie. I was saying nobody asked about the dollar yen. Certainly, Archie, if you're still here, sorry, my friend, I missed you. I don't know, that was 7 minutes ago. We'll come to the dollar yen, Archie. It's bid, it's strong, it's up. No, that's not going to work, is it? Let's get rid of that. Where did I get to? We've run out of questions on YouTube. Sorry, I lost my thread there. I couldn't find Rogers. So dollar yen, and I think it was Q. Let's just try reloading my questions from Facebook. Sorry, guys, I can't see them currently. See if anybody's sent me them. Somebody's tried to call me on Skype. Right, so let's have a look. In the meantime, it was yen, wasn't it? Let's just put the yen chart on because it's been a blistering move for dollar yen. There we go. We'll come to that in a minute. That's about dollar yen. Right, pound yen on the pound kiwi on the 4 hour, wasn't it, Raji? Yeah, I can see you now. Pound kiwi. Let's have a look. Pound kiwi. Where are we? Pound Swiss, pound Aussie. Where's pound kiwi gone? There it is. Pound kiwi. 1 hour's bid, we've run to 194 and turned down. 4 hour should also look pretty healthy. Yep, 4 hour, it's got this support for the month here, the 200 period moving average, nice and flat there, 191.11. Well, not nice and flat, was turning up. 50's turned up, the 20's gone over the 50, so that's positive here. On the 3rd, when was that? Wednesday. It's broken out of that range there. On your 4 hour, and that's the positive candle there was yesterday at 6 o'clock. The 4 till 8 candle yesterday, that's rallied us to 194. You can see it's a new high. I know we've sort of stalled there at R1, but that's still positive. It's over its 20 period moving average, it's over its 50-day moving average, and its 200-day moving average, and they're all pointing up. The little dots here are the parabolic SAR. This is just a different setup for the chart, but it's positive. And we're rallying here. R2 is 94.63 on the 4 hour time frame. Raja held key 50 level. Are you talking about the 50 period? Yeah, the 50 period moving average. Yeah, it's rallied, it's moved up. Parabolic SAR flipped back down earlier in the week. Yep, that's looking positive. Daily, as we just said, broke. Interestingly, that's the key one for me. The 200-day moving average, we've breached it today. So see where that fits. So key area, well spotted, Raja. The 200-day moving average, parabolic SAR's just flipped this week on the daily time frame. Obviously, we can't decide today. It hasn't finished, but that will be a positive close if we can close over the 200-day moving average. Last time, look to the left. What happened last time? Well, last time we finished above it, but the next day we went down, and then we started a new decline as we went another 50 days. So Key for pound Kiwi traders, the 200-day moving average, 193.25. 194 is the big round psychological number, and where R1 sits today. Technical extension of the resistance goes to 195.67. Support is the 20-day moving average at 191.86, and the key 50-day moving average, and today's our S2 at 191.00. So they're the areas you should be looking at, Roger, on that one, my friend. Lots of spam coming in here at the moment again. So anyway, let's have a look. Any views on euro yen, says Chris. Yeah, it's again depends on your time frame, Chris, my friend. It's been it's dollar's recovered very significantly against the euro. It's weakened. Where are we? Let's stick to this daily crossing or this 1 hour crossing strategy or setup. Ebony, we just looked at the guppy, but we'll have a look at it again for you, no problem. So euro, actually, I didn't look at the yen for, somebody asked about the yen. I can't remember who it was or where it was, but dollar yen here, big breakout and big move up. On the weekly, actually interesting, on the weekly time, I don't know if you can see this, on the weekly time frame, there was a key break here at the end of January when it went under the 20-week moving average for the first time. So a big move. It's moved, a massive 4 or 5 times the weekly ATR from that break of the 20-week moving average here, down here at 104.40 6 or 7 weeks ago now. Huge week this week, and you see massive candle over the 200-week moving average as well. As you can see, last time it's held and come back down from that, come back down from that, come back down from that. So it may be getting a wee bit overstretched. RSI is yet to move over 70 though on the weekly candle. So strong week, daily, huge move from this area down here. And again, another one that broke over its 20-day moving average all the way back here at the beginning of January. Everybody's talking about a weak dollar, but it's really the yen and the Swissy that have weakened as the positive vibes move out, the yield starts to move up, the vaccines roll out, the expectations of a big bounce back in the US economy moves forward. So big move up. We broke 104 through 105 over the 200-day moving average. Obviously, first resistance retraced, then broke it again. Retrace was less than the first time, so that was all positive. And again, the 20-day moving average came to be your friend there. 20-day move over the 50-day, and the trend has just moved over 106, and we've just ratcheted. We've ripped from a break of 106 through 107, 107.50 today, and 108.50 also tested today. So that's a big move to the upside for yen trades. Maybe getting a bit overstretched. The RSI sits at 79, 80. Many traders use 80 on the RSI, 14 as a oversold area, but it's still positive. MACD remains positive as well. Actually, can you see me? I don't know if you can see me there. There we are. I hope you can still hear me. Euro says, Chris, again, I don't know what time frames you're talking about, my friend. Okay, well, no, we'll come to the Swissy in a minute. Let's just finish Euro here. Let's go back to the 1 hour, the default. So again, the trend, let's start with the daily. The trend, from this sideways action it had been in has moved lower. We've broken under 120 yesterday. Key break, and now we've broke down, and 119 now for euro has been tested today as the dollar strengthened. 3 strong days for the dollar in a row. Wednesday, big one yesterday, Thursday, under 120, the close under 120, and then we've gone lower. So last time we went under 120 here in February, we bounced back straight away, and we've held that ever since, but yesterday's break. So the trend is moving down. This daily trend would have gone short, or certainly closed out that long and gone short the same day here on the 26th. And we've been short from 120.75 for quite a nice run of pips there under 119. So here, your stop loss would have been up here. Probably brought it down to about here now. I wouldn't bring it much tighter because it was a big, strong day yesterday. See how we finished today, but that's still to trend lower, the euro. Chris, my friend. Ogabungo, Swissy, yeah, dollar's really recovered against the Swissy. 93 last time I looked. 93 today. We've tested it, come off that. But again, another daily turnaround Trending lower, we went to 87.50 here, January. Moved sideways, couldn't get over 89 really, pivoting through 89 for most of January. This was February, started to show some life as the Swissy really weakened rather than the dollar improving. Rallied to 90, couldn't hold it, dipped down, and then the big break was here as we broke to a new high here on the 23rd of February. So a new high there, and it's ripped again. Another one that's ripped run, just like the yen has weakened, the Swiss franc has weakened. And importantly, this week, into the end of February, we got over the 200-day moving average, this gold line here. Big psychological line, significant line was 91.50, which is why all these lines are here. Then we've broken it, and then this week we've ripped through 92.00 and to test it to 93. So it's moved quite aggressively this week, first week of March. And here, this is the weekly time frame. So just like that chart we just saw for the weekly of the dollar yen, this is the dollar Swiss. And last Friday, it did the same thing that the dollar Swiss had done at the end of January. So end of week traders would have seen that as a positive break. The 20, can you see that? That's the weekly, zoom up a bit. That's the weekly candle, and it's broken over the 20-week moving average, which it hadn't done for an awful long time. All the way back here in May 2020 was the dollar yen, dollar Swiss over its weekly 220-day, 20-period moving average. So that was a positive end of week for the Swiss. Last week, it's had a very strong follow through here. The first week of March, so maybe a bit of a retrace, but that's bid and strong on the weekly. So certainly the high time frame trades will be long, and certainly the daily, as I say, went long. Really, the dip here, that was middle of February. That's been over its 20-day moving average. See that? There's a 20-day. Again, all nicely aligned. No reason to close that long trade. It's trending higher. Some weaker days, some very strong days when they have strong days. And so big support at 91.57. Ogalulu, my friend. Ebony, Guppy, pound, yen. Same sort of story. We've got stronger sterling, weaker yen. It's moved up when we tested 150. We talked about this earlier, Ebony. I don't know if you were here, but I'm happy to talk about it again for the sake of repeating myself. Other people probably got fed up with me talking about it. But let's start with the... actually, let's go to the weekly again. We've just been talking about the weekend. Again, another one that's been strong all the way back at the end of October, beginning of November, at the weekly time frame. Obviously, many of us trade the weekly time frame, but again, strong weekly trend. So be aware, the trend is very much up. And 150 is a huge psychological number, Ebony, for pound yen. We've hit that this week, well, last week and this week. The daily time frame remains positive. Struggling, or as you might expect, not struggling, but testing 150, trying to move higher. But again, on the daily time frame, as you can see, we've been over the 20-day moving average here, all the way back here from this first break at the end of December, so January, February. Strong for sterling against the yen, and it's tracked higher through the big 140 level, breached 45, 43, 45, and here we are at 150. So the trend continues to go up. The 4-hour showing a bit of weakness today, but there we are, banging into 150. This was the end of last week. Just can't move forward, but again, still bid here. If you're a 4-hour trader, you went long here on 8 o'clock. That would have been 2000 hours to close of this 4 o'clock candle on the 2nd, and here we are, the 5th was still long. So 4-hour traders went long at 49, virtually 49.07, so over the 49, and here we are 100 odd pips later, still long, still holding it. We haven't closed into that 9 period, so maybe some profit taken as we come into the end of the week, obviously. So Ebony, pound yen remains bid. 4-hour, daily, weekly, we've just seen. 1 hour, it's been up and down, and now it's trying to go short, but it's very much against the trend because the trend is up. Got some support, bottom of the Bollinger Band at 149.53. So far, we've dipped a bit, running out of steam at 50. So, sort of chopping around at the 150 level. So watch that into close today, Ebony. Nearly drunk all my coffee. Remember, this is our new employee appreciation mug from Hot Forex. Thank you very much, guys. Hollow chain will fly. I'm sure it will, my friend. Nicholas, Nicholson, sorry. Hello to you as well. Ida, cable, pound against the yen. Pound against the yen, another one that's come down today. This is the other extreme, the 1 hour time frame. We were down under 138, and we've recovered. Dollar's weakened here. The pound has picked up here. So good news. It may, the idea now is that expectations are that inflation might be real. The jobs are coming back quite quickly. It's a big beat. The dollar might say weaken into the end of the day. We'll see how we go. But on a daily time frame, dollar's been strong here against cable. Moving down again, gone short just yesterday on the end of day time frame. 4 hour sort of chopping down, big move yesterday afternoon. It's not yesterday, it was February, wasn't it? End of February. Then closed out, and it's gone short again here. Messing about. Last short was here, rejecting 140 yesterday. It's moved down. So 200 period moving average on the 4 hour support there at 138.28. Big significant move already this week. So some profits being taken on those moves, certainly. And as far as the 1 hour is concerned, as we've just seen, I was short, and that looks like that's closing out that short position. Last short position was this morning here. Has it gone back with the trend there? 7 o'clock this morning, short, under 138. And if you've held it as it's turned around, and it's the option of you close when you move back over one of the moving averages. It didn't quite then, but certainly it looks like it's closing out now. So that would you bring your profit there on that one? Maybe getting a bit pound coming back, dollar weakening into the US Open. 15 minutes from US Open. Let me have a quick check of the equity markets. Yep. Excuse me. So turnaround, equities up, dollars weakened a tad. We're back over 3,800 for the USA 500. Nasdaq intraday again found its floor yesterday. We breached 12,400. We sort of found a bit of support there, and it's moved up off there as well. So here that was short, and that then triggered that sort of tentative long position a couple of hours ago here, 3 o'clock, and it's got resistance at the 50 hour. It's a 1 hour chart on the Nasdaq here. A bit of a bounce back up today after a big sell-off yesterday, big sell-off this week. So there may be some bounding up. But if you look at the daily time frame, we are significantly under that 50-day moving average on the Nasdaq. We're over. This is 10% now. This high here from the 16th of this is the futures CFD market. The cash, I think, high was early in February. Anyway, 12 days down from the high. Trading days, and a big sort of 10% move down. So it's corrected. It's under the 20-day moving average. Significantly, it's under the 50-day moving average. But has it found a floor around 12,400 for the Nasdaq or the USA 100? We shall see big key support all the way down there at 11,800 for Nasdaq. So there we go. Nicholas Nicholson. Is there any impact on Canada export roads news to any CAD versus pairs? Yeah, the Canadian trade data came out with the US trade data, Nicholas. We got the PMI's data. If you're a CAD trader, watch that in about 45 minutes, because that's a key number as well. The PMIs, the IV PMIs as they call them in Canada, they're out in 45 minutes. But the trade balance. Let me check the Aussie. I didn't actually see that data. It wasn't on my particular workstation when I'm live. It's the trade balance. Canadian trade balance was positive as opposed to negative. Yeah, it's a big positive number, 1.4 billion as opposed to a negative 1.4 billion. So that's a big surprise for the Canadian trade balance. So again, that should have helped the Canadian dollar and certainly Canadian equities. I haven't got any particular Canadian equities here. Hang on a minute. Is Andrea sending me? No, she's not. Where was I? What were you asking? Sorry, it's not Vince. Vince is messaging me elsewhere. Nicholas, is there any impact on Canadian export rose news to CAD first? Yeah, think about it. From what we've been saying, Nicholas, we've been saying the yen's weak, the Swiss is weak. So if we look at CAD, we look at those two CAD pairs, you can see the CAD, and as CAD has benefited from the rising oil price and continues to do so. So if we look at the two CAD crosses where CAD is the leading pair, you see CAD yen is just really rallying nicely. It's continued to move up today. This is the daily on the CAD yen. The 4 hour, again, positive over its 20 period moving average here from the beginning of the month. I'm going to dip down. So that's trending higher. The 1 hour will be the same. There we go. 1 hour trending up into support of the 20 period, into support of the 20 period. And obviously that's the news, Nicholas, of the trade balance in the last hour has been very positive for the Canadian dollar, and we have a similar sort of pattern against the weak Swiss franc as well. So CAD Swiss, this is the CAD Swiss on the daily time frame. Again, another one that's been really positive. Lots and lots of pips on offer there as it's broken out of that particular level there. That's your one really to look at 0.7050 for CAD Swiss. But the first move over the 20-day moving average was a weakish one here on the 1st of February. But by the 3rd of February, we've broken the 200-day moving average and the 50-day moving average. So we've moved up. So here it's messy, but that's a positive one here because we've now got them aligned. So here they were out of alignment. We had the 200, the 20, and the 50 all out of alignment. Here, the break has moved up, and now we've got 20 moving up nicely, the 50 moving up nicely, and even the 200 starting to move up. So look at those all nicely aligned. Big old move there. Lots of pips on offer. You stayed the course. Your stop loss would be down about here somewhere now, 72, something like that. But it's a nice move up. The weekly be also positive here for CAD Swiss. Big, strong move in the last few weeks. Now that's broken out there. See how we've gone sideways. That big breakout of 70 here. That was that final week of January. And a huge rally through February. And here we are, ran to the 200 moving average on the weekly time frame there at 73.30. So it's bid, my friend. And that Canadian trade news was obviously only added to that move here. This is CAD Swiss, and there we go. Strong day today. Actually, come down a bit on that, interestingly. But strong day all the same. I hope that answers your question, Nicholas. Who's next? Malik says good. Oh, I hope that is good. Ebony, thank you. That's not a problem. That's what we're here for, Ebony. Do join us. Andrew will be on live on Monday. I'll be live again next Thursday. Where are we? 20 minutes. So I've been here an hour now, but we'll keep going. I'll stay till the US Open, see how the cash opens. But Michael, gold. What do you want me to say about gold? Gold is under pressure and drifting down. Well, I don't know what time frame you're interested in, Michael, but gold remains very much pressured. Remember, it's a non-yielding asset. Means you hold it, the gold bullion or the gold chains, or however you hold gold. But it doesn't actually give you any yield. There's no so like a stock where you get a dividend or something that yields something over time. It's just an asset, a safe haven asset, and that's why lots of people like holding it anyway. But it costs you. You got to put it in a safe deposit box or in a bank somewhere, bank vault somewhere. But gold is pressured as the yield market moves up. So what I'm looking for? There we are. To the downside. So Michael. Remains weak. Gold market, where are we? Gold daily here. I've said this about 3 or 4 times today, but never mind. The trend is down. The highs are getting lower and the lows are getting lower. That's all you want to know as a trend following trader. Stay the course. Look at obviously other things. Here we've got the 20-day, the 200-day and the 50-day. Yes, they're out of alignment because we've been moved up, so that's a bit negative. But the 20's under the 200. And it's moved down. So we're under a huge psychological 1700. Remember, when you're trading gold, 1 cent is 1 pip. So these dollar moves are huge pip moves. So be careful with your margin. Be careful, your lot sizes. as ever, whatever asset you trade, but gold can be particularly volatile. Some huge candles on daily time frames, and we've had a huge end of February as we breached 1800 and we've just collapsed $100 under 1700 to new multi-month lows here for the gold market. And today, there's been no different weekday. Found some support through here under 1700. So we've got a bit of a turnaround as the dollar's getting sold at the beginning of the US trading session on that very strong jobs number. So expectations are that perhaps there won't be as much stimulus. There's bound to be if the jobs come roaring back. Remember, big day. It was a key day. It was always going to be a key day today. And that's what we've seen. So just to recap, NFP, non-farm payroll for February, the March number, 379,000, the first reading of the February number, non-farm payrolls. Remember, it's missed the key lockdown week of the big cold snap. So that's a bit of a caveat. However, the previous month, last month's January number was revised up from 49,000 to 166,000. So it's a huge revision to the upside. And expectations were about 180,000 today, and it's coming nearly 200,000 better at 379,000. Earnings are holding up. It's 5.8%, so 5.3%. So I said at the beginning, it's probably some significant services jobs coming back as earnings have held up. Labour force participation has held stable at 61.4%. The wider range of unemployment has remained stable at 11.1%, but the headline unemployment rate has ticked down one tick from 6.3% to 6.2%. So all positive data from the NFP numbers today from the United States. So dollar initially was positive. It's weakened on expectations of perhaps the economy's coming back more quickly, which is what was always expected, which is why the dollar had weakened towards the end of 2020. So we, again, as I always say, we'll see where we go from here. But current fairly significant bounce in the gold chart there. Okay, let's have a look. All right, again, I see all your Archie saying sell gold. Archie saying dollar rand. I haven't looked at the rand for a while, Archie. Let's have a look. I've got the rand here. I think I have. If not, we can go to the other, because the emerging market, let's go to the my main cross. The emerging market currencies were doing very well against the weakening dollar, but they've suffered as the dollars come back to life. So dollar rand had been moving down quite significantly. Dollar rand here. The daily, this is the rand on the daily time frame. So let me zoom in. Oh dear, what's my laptop saying? No, we're going to still look down. Don't wait for that. Let's just clear that off. That fib. Delete. It's a bit messy, isn't it? So what's been going on? So we'd been tracking lower under the 20-day moving average. We moved up. We went under 15.00, a big round number there at the end of 2020. So we floored there, and then we tested the floor here from December. In mid-February here, we went under 14.5200, and then we've recovered from there. So the big update for the dollar against the rand was here towards the end of February again, the 25th. Huge engulfing candle. See how it's taken out all of the February action basically in one day. Hopefully you can see that. I can't see what you're saying. So Archie, who's asking about Victor, NFP for March is not bad. It's very good, Victor. It's not bad. It's very good, my friend. Archie saying sell gold. Again, these questions go through so quick, I can't see them all. I've got 61 comments here. But why can't I see them all? If I bring up the actual webinar, I just hear myself in stereo, so it's not good. Anyway, Michael's asking about gold, and somebody else was asking about rand. Michael, what were you asking about? 4 hour? I'll come back to you, Michael. 4 hour time frame. Is it still looking like it's going to plummet? It has plummeted, Michael. The trend remains down. We'll come back to the 4 hour time frame in a minute. Let me just finish with the rand. Somebody's asking about the rand. Negative trend ended here. We went back over 15 for the rand. 15.30 is that key resistance from a support area as we were coming down here in November. These two blue lines here. So see how that we rallied into it. couldn't break over the top of the channel, moved back down, back to the channel, then back down again. And here we are now. So this is a key channel on the way down. Will it be a key channel on the way up? That's the last leg down. And there's probably a bit of a Fibonacci level on there. So it's probably why that Fibonacci was on there actually before. So that was our leg down. And where's the 61 sit? So the 61 sits here. So yesterday we went over the 61. So it's a key level yesterday. So 15.30, key for the rand to move, for the dollar to move up against the rand here. So will it get into the channel? Will it break out the top of the channel? So 15.64 is the top of the channel, 15.30 the bottom of the channel. The 61 Fibonacci level from the sell-off from January to the low in February sits there at 15.16. So they're your key levels for rand traders. I hope I've answered that question. And again, that whoever asked about that has disappeared, so I can't find that. Andre, yes, excellent NFP results. Indeed, they were. Was Archie asking about rand? I think it was. Archie saying sell gold. Well, gold keeps going down. Right. Who was next? It was Michael asking about the 4-hour time frame on gold, wasn't it? Was it gold you were asking about, Michael? Sorry. No, yes, it was gold, wasn't it? You were asking about gold, and then you said the 4-hour time frame. Yeah, we did look at the 4-hour time frame, didn't we? I don't know if I've got gold on this. Have I got gold here? I haven't got gold. Oh, yes, I have. Here it is. Same setup. So 4-hour. There we go. It's been short. As I say, this you can see that clear. I mean, these are great when they happen, don't they? They obviously don't always happen, but you got to take the trade to be in it. So 4-hour traders have been long since we went under the 20-period moving average here on the 24th of February, Michael, and they've continued to plummet. Retrace down, retrace, but the retrace wasn't as high as the classic little move down, isn't it? I haven't got my pen. I can't put my pen on here, can I? But anyway, you get my point. I'm sure you get my point. So down. Actually, I can't do that, can I? So we got down, then we retraced, then we went down again, then we retraced, but the retrace was lower than that retrace. So the highs are getting lower and the lows are getting lower. So then we down and then we retraced a bit, went sideways, down a big down candle today. Or whenever that was. When was that? That was last night, 5 o'clock to 9 o'clock candle. New floor formed here, down here. So that's a floor on the 4-hour there at 1690. And we haven't broken under that yet today, but the trend remains to the downside, Michael, my friend. Can you please tell me about pound USD Forex trading pro strategies? Hello, my friend. I hope you're well. 139 at key level. If we look at, actually, let's look at a different setup. Let's look at the cable. Where's my pound? British pound. There we are. Different. This is the end of day setup. The 200-day is the yellow line. The blue line is the 50-day, and the white line is the middle of the Bollinger Band. That's our 20-day moving average. On the daily time frame, you can see. Actually, it's the wrong chart, so you can't see anything at the moment. Let's pound. There we go. You can't see the MACD because it's behind me. If I disappear, can you still hear me? If I disappear, if I make that bigger, I disappear. There, you can see the MAC. It started to move down the signal line, or the histograms bars are below the signal line. So we've ran out of puffers. We've rolled over and rejected that 142.50. 142.50 that we had just before the end of February. So big rally up, positive, rejecting 142.50. This is 140. Oh, it's actually not 140. This is 139, but 140 we've gone under, and we're trading at 138. So down a day today. As I said earlier in the other charts, that's ended that rally up because we're back under the 20-day, and it's probably enough to a tentative short yesterday on cable for end of day traders. For lower time traders, actually, let's go up to the higher time traders would still be long. This is the weekly for cable. As you can see, we're over the 20-day moving average there, and it's held and held and held. But as I said earlier, all the way, it's a bit messy, this one, all the way back here to November or the summer of last year. This is September, October, and we broke over the 20 period there in November, and it's been long ever since. So that, the weekly's up. The monthly is positive. As you can see, this is the monthly. The daily is still relatively positive, but it's ended its recent run, so it's looking to a short yesterday, very much against the trend because the weekly's still high, the monthly's still positive. As we come down the time frames, the 4 hour would have turned around earlier, so the 4 hour went short here. Also yesterday, the 22nd, the 25th of February looked to move up, but couldn't get over 140. The 4 hour. This is 139.80, but it's 140 is around about there. You can see it's capped and flattened out there. The 50-hour moving average then moved under the 20 period here, haven't moved up and not done anything. So again, a tentative short yesterday at 8 o'clock, and it's continued to move down, but then found support at the 200 moving average here, having plummeted below that, but found some support today at 38.26 on the 4 hour time frame. So remains weak. Intraday 1 hour, it's been moving down all day, as we said earlier. There's that floor on the 1 hour at 137.98. So 138 really is the 1 hour support today. And then we've picked up. There's the hour candle for the NFP hour, and then we've moved up since as well. So it's looking like it's going to perhaps move up as the dollar's weakening somewhat. Okay. No problem. Michael, appreciate that. No problem, my sir. That's what I'm here for. I'm running out of steam now, guys. I've been here an hour and a bit, so my voice is starting to go. Text what, my friend? Let's check. Don't understand. Right. Final check of comments on Facebook. And apparently there's 61. I can't see them all. Let's have a look. 11 minutes ago, according to this. I wonder if that's right. Let me just refresh that. As I said earlier, Employee Appreciation Day today. So Hot Forex sent us we all got a cake today. Nice cake. Check my Facebook page for that. And we also got a mug. So I'm using my new mug. So thank you very much, guys. Great day. March the 5th. So Archie's actually messages the last one, sell gold. So you've obviously all got bored of me and disappeared. I don't blame you. Fair enough, everyone. Hope you're well. Take care. Have a great weekend. Trade carefully. Let's have a look. Markets have just opened. Let's have a look how the cash markets have opened in the United States. Probably to the upside. It's a good NFP day. Big rebound. That's what it's looking like. And they've opened positively. And dollar moved up and then moved down. 10-year yields also higher on those non-farm payroll numbers. Nice positive news for the US S&P futures, up 40 points plus from the big sell-off we had yesterday. And the cash market opens positive as well. The USA 530 and the 100, the Nasdaq's moved back up as well. So positive start to the US market. So if we go back to the, let's go back to the intraday crossing strategies. We'll just finish, see where we are. So gold on the 1 hour, it's ticking up a wee bit from being under 1700. So 1700 is key. So let's just run through them all. So euro continues, the pressure remains to the downside. We went as low under 119. That's a key support, and we're back up now as the dollar's weakening a tad post NFP. Yen, big rally we've had in the yen, 108.50, huge move. Running out of steam there today, under down. So R1 and R2 key areas now. The 20-day or the 20-hour moving average sits at 108.15 for yen traders. Sterling, another big move under a psychological area, 138. We went under here. This is 138. Earlier in the week we were all the way up here. It's not earlier in the week we were at 140, but it was only a week or so ago we were at 142.50. So big move down for sterling against the dollar as well on the higher time frame. The 1 hour time frame moved, I said, under 138, and it's bounced up recently. Aussie went under 77 today. Went to 76.20 NFP data. We're back to 77 again. The Aussies had a really strong run, but another one that's breached now its 20-day moving average yesterday, moving down. So 77 becomes the key support area or pivot area, possibly by the looks of things there for the Australian dollar. The Canadian dollar, we got the daily time frame. So the big downtrend may have ended. Perhaps too early to tell, but that's been running and running. Oops. And then we turn around. So 127 becomes key for dollar CAD. Swissy, as you say, big move for the Swissy from sub 89 here in the middle of February. A few weeks later now, here we are at 93. So again, another one that's trending higher for the dollar. Will it run out of puff up here at 93? But certainly the Swiss franc, the Swiss National Bank would like to see it certainly weaker, I'm sure of that. Bitcoin, nobody's asked about Bitcoin today. Bitcoin earlier we down and under 47,000, in fact 45,600 this morning. Bounced up again, but still under 49,000. So again, another volatile week for Bitcoin, but still holding 45,000 as a key support area now, and obviously 50,000 to move higher, and then the new all-time high above 58,000. It does what it does, Bitcoin. So obviously, all be careful of that. Gold we talked about under 1,700. Oil holds over $65 today. US oil, UK oil even higher. Dollar index, as we said to Carjar earlier, we're over 92 now. So another one that's trending to the upside. And I'll leave you with the dollar index itself. So dollar comeback. Over 92, we're finding significant resistance at 92 intraday today, but the daily time frame, big rally this week, over 93, 91.50 for the end of day for the dollar index, and see where we finish today. So that's all for now, guys. Take care, trade safely, have a safe weekend. There's no more questions. No, Shara was the last one. Yeah, strong NFP numbers today. We'll put a post up on our analysis page, so do watch that. Busy month this month. Remember, guys, it's the Fed. It's not the Fed. All the central banks. In fact, the Fed obviously have their meeting on the 16th. So yesterday's announcement from Jay Powell may be the last public announcements we hear from them. Certainly, they go into a blackout area a week before the meeting, which is a week on Tuesday. So see if there's any more chatter from the central bankers over the weekend or earlier part of next week as well. So I say central bank speak this month, key month. We've already had the RBA and all the other major central banks to come this month as well. So take care, everyone. Trade safely. May the trend be with you, and may the pips be with you, and have a safe and great weekend, everyone. Take care. All the best. Bye-bye.